Ordinary shares in the 13.8 billion rand broad-based black economic empowerment scheme operated by MTN Zakhele become tradable this month, offering qualifying black investors the opportunity to buy shares from the existing shareholders. Thulani Qabashe, chairman of MTN Zakhele, joins us now for more. Thulani, looking at the value that you've managed to create for the investors who got into the game back in 2010, the value's increased by at least 68%. Good job that you guys have done so far.
Well, that's very good. I would like to take all the credit, but we really rely on the MTN dividend. So we're not an operating company. We're just a special vehicle for the BEE scheme that MTN put together. But it's been phenomenal. Just
on the scheme, I understand that a couple of years ago you had some debt to settle. Has that been taken care of now? Or?
No, there remains some debt.
How much?
I couldn't give you the exact figure right now, but the main point is it's a 6-year scheme. We're just 3 years down the road. And after 3 years, it was intended that the shares would be tradable, restricted, of course, to black individuals. 2016, the shares will then be tradable to anybody. And at that stage, we would first have to settle any remaining debt. If there's any, of course.
That means I can come into the conversation, because yes, you said because I'm not allowed to have these shares, I can't talk.
Well, after 2016.
After 2016, all right. Okay, well, I'm taking a long-term view now. Why would people at the moment be investing in MTN Zakhele rather than going through MTN itself?
Well, if they look at the value that's been created over the years, and the possibility that, once all debt is settled, it could in fact be seen as the same value as an MTN share. The kind of prices we're looking at the moment would make it something of value.
So just explain that to us, because you're not listing on the stock market, you're listing on Equity Express.
It's an over-the-counter scheme. Yes, yes.
What's the difference in the values?
So we really look at net asset value per share, because the market will determine a price on the day we open. But we've had 2 analyst reports which have sort of given a range of 120 to 143. Based on our mid-year results, the net asset value per share was already at about 104. So, and anyone who came in 2010 would have paid 20 Rand. So it's
but just on that, Thulani, we know that liquidity is a huge problem when it comes to BEE shares, and no doubt there are other influencing factors with regard to that, such as investor education, not understanding how the market works. How are you addressing such issues?
Well, on the education bit, at our last AGM, we had followed it with a workshop just to start the process of educating our shareholders. We've then arranged roadshows, which served as workshops for information, but also an opportunity to register to be a trader. So we think through those sessions, which have a lot of question and answer opportunities, we think people have had the opportunity to raise their issues and get answers. Your second question was on
the liquidity, the lack of liquidity in the market.
We have quite a diverse shareholder base. It comprises 120,000 shareholders, and amongst those are some groups, stockfiles and special purpose companies that have been set up, and we've seen the kind of interest in the run-up to the launch, which suggests to us that we can expect some volumes of trading. So we think the inherent value and the interest that's been shown will probably not have a liquidity issue.
Fantastic. A 7-bagger, or a 6-bagger rather, in 3 years. It's incredible performance. Before you go, Eskom used to run the place.
Yes.
Do you think the guys are doing okay now? We hear that we're not going to have lights soon.
It's 6 years since I left. I think it would be very unfair to comment.
You're naughty.
Gosh, you blocked that one nicely.
Exactly that. Did you actually?
No, Alec, I'm on your side here. Hey.